Hey guys, this is Kevin Kerner, and I'm the host of Tech Marketing Rewired. In this episode, I sat down with Omar Akhtar, the founder of Benchmarker and one of the sharpest minds in B2B research that I've met. We dug into his latest research on how SaaS companies are really spending their marketing budgets, and the patterns he uncovered actually might surprise you. We talked about the hidden cost of brand, the myth of perfect attribution, and what truly separates high growth companies from the rest. I promise his latest research on how 250 SaaS companies are investing their marketing dollars right now is going to change your mind about a lot of things, regardless of the industry that you're in. So I'm really excited about it. Let's get to it. This is Tech Marketing Rewired. All right, Omar, welcome to the show. Great to have you.
Thank you for
I
having
am I am super excited to talk to you today. As you know, I have been following your research a bunch, and we've had several conversations back and forth about the brand to demand thing here. So I'm very glad you joined us.
I really appreciate it, Kevin. I'm excited to get into the conversation today.
Yeah, awesome. I thought we'd start since not many people, maybe some people don't know you. I thought you'd start with a little bit of your background and then a bit about Benchmarker and the type of work that you do.
Yeah, absolutely. So I'm the founder and principal analyst of Benchmarker, which is a research service that provides marketing, spending, and performance benchmarks to B2B SaaS companies. So I try to get as specific as possible. And my background is as a journalist and a tech writer. And then I was an analyst at the head of research at Altimeter Group, which is kind of like this mini Forrester out here in the Bay Area for almost a decade. And then I was an associate partner at Profit, where I was helping consult companies on marketing excellence and content marketing. And really, this business just came out of fulfilling my own need. Every time I'd go in and evaluate a company, they'd all ask me the same thing, which is just give us the numbers. What does a good conversion rate look like for a company of our size and our industry? How many emails should I be sending every month? And that number changed depending on the kind of company you were. So I decided to go out foolishly or wisely and decided to solve the problem on my own.
Yeah, that's great creds for what we're going to talk about today. And as you know, I'm kind of jazzed about the whole brand to demand thing. So I really want to dig into some of that research you've done recently. I know that your latest research really talks about, I guess, the how companies are investing in both brand and demand. And as we know in the tech space where I play, demand generation seems to get all the dollars, but you're finding research that really nuances that out a bit more. So I wonder if you could talk about that research. Just give us an intro to that research, what you're finding, and then we'll dig into it some.
Yeah, absolutely. So what I do with my research is I survey about 250 plus B2B SaaS companies on a number of different topics, and I tend to do 6 surveys in the year. And the first and most, really the biggest one is the one on budgets and spending. And then I sort of ask them questions on following up on performance marketing and events and all that stuff. But budgets and spending is the big one. And what I found was when I asked marketing leaders to tell me how they allocated their budgets across kind of really the funnel, if you look at it. So brand awareness, performance marketing, demand generation, sales enablement, post-purchase marketing, and even sort of account-based marketing and customer success. One clear pattern emerged, and I kind of did this last year, and I did this again this year, and the results were strikingly consistent, which was that the companies that were performing better than everybody else, that were exceeding their revenue and their growth targets, were investing almost equal amounts of their marketing budget in brand as they were in demand. It was about 48% to 52% in favor of demand. So fairly close, which was different from what I found overall when I surveyed B2B SaaS companies. Overall, I found that they were investing 60% in demand and 40% brand. But here's the kicker. The low performing companies were over-indexing on demand by a pretty decent amount. Now they're getting into the range of 65% demand and maybe 30% in brand. And that was really eye-opening to me, which was, a lot of people talk about like, how do you measure brand and how do you see the effects of brand? And there's a lot of ways you can do it. But the big stark difference was look at what happens when you cut brand. That was sort of the biggest thing is like, it might be difficult for you to measure what it's doing when it's there, but look at what happens when it's not there. And really what it said to me was that brand is the foundation upon which demand generation succeeds. And that's the way to think about it. And you can take it away and you might survive for a couple of months, but in the long term, you take away that brand spending, it has a very outsized impact on your conversion rates, on your awareness rates, and your growth. And so that was really eye-opening to me. And I was happy to put that research out there.
Yeah, that's why I was so excited about it because you can kind of feel that, just as a consumer, a business consumer, if someone's not on the day one list, you're probably not going to look at. They're not even going to enter in your mind. And if they show up in search or you may try to find someone a brand name, and if other brand names that show up that you don't know, you're not even going to look at them. So it's really incredible that you put into research, what I think everyone feels, but most marketers don't necessarily really want to wrestle with, because the term brand comes up, which can be really tricky. When you did the research, did you do any, did you define what you said was brand and what was demand marketing?
Yeah, absolutely. No, that's a great question. Comes up all the time. The simplest way that I could get people to categorize their activities in brand versus demand was to say that brand is marketing activities that are raising awareness about what the company and what the company does, and not asking for any follow-up action afterwards. So no clicks, no shares, no conversions. It's purely really just eyeballs. And so all digital activities that they would blanket under that would be considered brand. And then demand would be activities that increase awareness, but consideration, but follow up with a direct action. So whether that's attending an event or converting, opening something, doing something that's kind of a measurable activity. And so that's the only kind of, to make it sort of easy for people to bucket these things, because there's a lot of debates about what's brand versus demand. That
Yeah.
was the way that I ran the survey.
Yeah, I find the term brand is kind of a loaded term,
Yeah.
because people think billboards and, TV ads and those type of things, but it can be, it's any sort of branded media. It's this type of stuff we're doing here for brand. It's video. It's those type of things. Did you find that there was any? I would guess. Let me just take a guess. I don't know if this would show in the research. I would guess that bigger companies are better at investing in brand marketing than smaller companies. Is that true?
Absolutely,
Yeah.
absolutely. And there's a couple of things that are in play over there. Is the bigger the company, the more likely that people already know about them.
Hmm.
So
Yeah.
their effort is less about those quick capture conversions, and they're also not as focused on high growth anymore. Once companies get above the 250 million ARR mark, their growth rates are pretty conservative. And so I would say anything between like 11 to 20% is on the low end, but that's decent for a company of that size. But when you're high growth, the problem that I think a lot of B2B SaaS founders and CMOs don't realize is that if you are chasing growth, if that's the biggest metric that you're looking after, you have to spend on brand, because that is what feeds growth. You can't grow by kind of capturing the people that are just in market. That's a tiny percentage.
Yeah.
Not
Like
going to feed.
5%. I think the research says like 5% of people are marketed at any one time.
Absolutely. And so that's kind of the big fallacy there, is that when people think of brand, they think of stuff that's nice to have but doesn't work. And that's really the fundamental flaw in understanding how marketing works, is that, we can talk about attribution and all that stuff, but the stuff that we've really gone too far the other way in focusing on stuff that gets measured and measured sort of in this very conservative manner, that's kind of bean counting rather than
Yeah.
actually seeing the holistic effect.
Yeah. Do you capture any, or do you have an opinion on any qualitative data that's as to why the smaller brands, let's say mid-sized to smaller brands, aren't invest in brand? Is it just a misunderstood term around brand? Is it pressure from sales? Is it, the experience of marketing leadership? What is it?
Two things I think that we saw at play over here. Uh, One, when we see there's a big influence in private equity investment, which is different from VC investment. So that's where we see a big difference, right? So if you have VC money, you're told to grow and grow fast. And when you have VC money, you can spend on stuff that isn't, it's not that you're not going to get questioned on it, but it's more understood that you can spend on stuff like a billboard, or spend on stuff like ads that just kind of show your logo and your name and what you do. And we don't track anything after that. That's kind of understood as like, to grow fast, you got to spend a lot, you got to get awareness, you got to capture the market's attention. But when you're PE funded, the emphasis is growth is there, but there's a big emphasis on efficiency. So if we were to go into PE companies, you'd see a lot of demands of saying that, yes, we understand you need to grow, but we need you to be profitable. What can you cut? And that's where the mistake that happens is that the brand stuff, because people struggle with proving the impact of it, is the first one that gets cut, rightly or wrongly. And so it's like, okay, we don't need to put out that many ads. Maybe we can make it up with email and content marketing, which is what a lot of companies do. We found that low growth companies, where if you look at how we segmented their budgets across channels, low growth companies are spending more of their budgets on email and content marketing. So they're trying to make up for that with just organic.
Wow. That's crazy.
And the
That's
high growth
crazy.
are spending on paid search and paid social. Sort of no two ways about it. You got to pay to play. Events was an interesting one, though. It's almost like when PE funded companies were the only cohort that didn't want to spend on events. So everybody else was kind of spending a lot on events, but except for PE funded companies. And so it's one of those things where it's like, if you are not allowed to spend on advertising and kind of your traditional brand awareness activities, you try to make it up through content marketing, organic content. You try to make it up through just, events, showing up at events, doing what you can there, or you try to make it up with email marketing, your newsletters and your drip campaigns, whatever it is. And that's really, really difficult.
Golly, that is so fascinating and counterintuitive to so many marketers that are thinking about content marketing and email and nurture and all these things. It just is crazy. You should market this research to PE companies so you can help
Yeah.
out all those smaller brands.
Absolutely. And again, I think to an extent, PE companies get demonized a lot in the marketing world. And it's one of those things where, like, you have to understand their goals. Their goals are fundamentally different from venture capital goals. Their goals are to have profitable companies that where they can easily say that, look, this is a money making machine and we can resell it because we've, put it into shape. And that can look kind of overly stifling for marketing. But I also think that the days of kind of free VC money is kind of ending as well, right? And so it's not that you're not going to be given money to grow, but you're going to have to be very convincing about how to do that. And again, this is kind of a particular affliction of B2B SaaS marketing. If you talk to marketers that are on kind of everywhere else in the world and in the country, they intrinsically know brand awareness. It's the demand gen side that they struggle with. They don't know how to capture the demand with something like digital ways. They understand brand awareness really well. In B2B SaaS, it's kind of the opposite, where they're very good at capturing in demand and they're very good at converting and having digital experiences and all those tactics. But building a brand and sustaining it is something that's kind of a fundamental science that they need to get behind.
Yeah, it's a kind of a speed to outcome play that you need to live within. And brand is not typically a speed play. It's more of a longer term play. Maybe it's getting shorter with some then more authentic marketing, personality led marketing, but it still takes a lot longer to get to that outcome. So that means that some of these smaller, well, let's say mid-size SaaS companies to smaller SaaS companies, they must have a catalyst. They must have a person internally that's helping, that has that sort of mindset. I wonder do you have any insight into how they're messaging this effort in their own companies to actually be successful, to get to be able to get the leeway to spend some money on brand?
Yeah, and I feel for marketing leaders at those sizes of company is typically they've been brought up in the world of demand gen, right? Like that's where they come from. It's very rare that you see folks that have been on the agency side and have built brands and then they come into sort of like SaaS. The folks that are here are mostly coming up from the demand gen side of things, so they live quarter to quarter, and that which has kind of been the SaaS way of doing things is like quarterly growth, quarterly numbers. When you live quarter to quarter, it's really difficult to just talk about brand because that doesn't happen. The best thing I can do for marketers at that stage is kind of give them good analogies, right? If you go to the gym and you work out, yes, you can see maybe a little bit of a difference, but you're not going to lose weight overnight. You're not going to build muscles overnight. You're not going to see a big difference day to day. But once you see a difference, maybe 6 months, a year from now, not only do you see a difference, but that difference, the benefits compound continuously. So once you get fit, like you stay fit for a long time. It has so many benefits that go on. And those are the kinds of stories that we have to kind of tell marketers. And this is ironic coming from a data guy. It's like, I can show you all the data you want, but I don't think marketers have good stories and good analogies to educate their investors, to educate their CEOs, to say that, look, this is how marketing works. It's a long-term effect. It's this thing feeds into this thing. It's not kind of two separate levers that we have to pull. One feeds into the other. And if we take one out, then the other one won't work. Those kinds of analogies, I would imagine, do a much better job than any data that I can give you. But you
Yeah.
should look into the data.
Yeah. I had one CMO that I was talking to probably a month or two ago who I was having this same discussion with. And she was telling me that she really doesn't mention the term brand when she presents to the ELT because she's just worried. So she has brand tactics going on, but she'll try to basically like keep them under the covers. And that's the one way that she could get it across.
Yeah.
But there must be, so I'm going to ask you about measurement
Hmm.
because you can measure brand and you can measure demand, those two things separately.
Hmm.
Maybe a couple questions. One, have you seen any successful efforts on measuring brand that's not a bigger brand study? Because there's a lot of pushback against doing those, and they're typically long term. And secondly, is there any? Have you seen any success in measuring brand's effect on demand? So, what metrics would equal? Hey, we're doing this brand effort. It's actually having a positive effect on the demand generation that we're running.
Yeah. I can give you kind of the small micro example of myself, and then I can kind of give you the companies I speak to. The key word is incrementality. Are we, and I hate to use sports analogies, but are we just getting more chances at bat? If you start thinking about marketing as a numbers game, and here's the funny part, is like we understand that sales is a numbers game, right? Everybody knows that, like, look, and it's like baseball, that you get like 30% of the time, if you convert people, you're a Hall of Famer. And that's kind of sales. But we don't extend that same sort of mentality to marketing. Everybody expects marketing to be like that one viral moment, or everybody, the Steve Jobsian kind of way of getting things done, where you're just this giant marketing machine that's magical. Marketing is a numbers game. The more you do of every marketing activity, the more people that it touches, the more positive effects you're going to see. And I can kind of give you the idea that, we were talking about some of the stuff that I've done for my own business, is when I write more blog posts, when I send more emails, when I just kind of show up more. Now, I can't tell unless somebody specifically tells me, and I don't expect this to happen, where someone says, I read that LinkedIn post of yours, I am ready to buy. That was awesome. It's never going to happen. But I do know that people that read my LinkedIn post 6 months ago, they followed me on LinkedIn, they look at everything that I'm reading, and then one day they're like, you know what, I want to take a call with Omar and find out a bit more about this kind of stuff. Now, again, the ROI on that is astronomical. It doesn't cost me a lot to put it out there, but I can't say that my LinkedIn converted this many people. All I can say is when I put out more LinkedIn posts, when I do more of it, it reaches more people. And when I reach more people, more of them visit my website, more of them follow me, more of them respond to my emails. Good things happen all around. And I went from this world of trying to figure out attribution
Yeah.
models and checking out measurement software. And today I really am kind of on the other side of it, which is to say that, look, it's kind of a fool's errand to focus so much on attribution. Are good things happening? Are more good things happening? Are you getting more chances at bat when you spend on brand? And if you are, then you're doing something right. And if you aren't, if all that spent on brand is having a minimal effect on at bat, that's when you know that the activity within that is not working. Your creative is not working. Your messaging is muddled. You're targeting the wrong audience. Those are the kinds of things you start to figure out. But as a whole, if you do it right, it should work.
Yeah, I totally agree. I think the LinkedIn analytics, the LinkedIn measurement and analytics is actually underutilized from a brand perspective. And maybe if there was more employee-led branding, so where an employee becomes the actual part of the brand and they get to speak, and you could look at their analytics on, how many followers they have, how many people are commenting on their posts. That seems like one of the new marketing benchmarks that sometimes really getting looked at, because it's all about click to conversion, but there's a whole host of engagement that happens before that conversion that's trackable on LinkedIn. You can see it on LinkedIn. You can see what's happening. It's just yeah, and that converts back to the site, and you can track it on your site. I was telling you before we got started about our YouTube journey, and we really didn't do much on YouTube till the podcast started, and the last few months here. And I got a third of all of the traffic we've ever had, and we didn't have much traffic. We got a third of our traffic in the first month of launching the YouTube channel. So it's just, and what's incredible is the shorts. It's primarily the shorts that work, and it's the weirdest topics on the shorts. Like I did one topic on a white paper, why white papers may not be the best piece of content to put out nowadays. Then that got more than talking to Scott Brinker or someone on that one week. It was just so. There are new marketing metrics that you can go after that maybe aren't as wonky as some of the demand gen metrics you would have normally put out there, but they may be even more valuable in today's economy.
Yeah, absolutely. And that's great to hear, by the way. Like, I think, the fact that because it's hard work, right? Putting yourself out there but you put it out there. I think it's fantastic that you're getting great results and sort of immediate impact. That's got to be really validating.
Yeah, it hasn't converted, like it's converting to traffic on the site. But I believe, and this is something Jacob Banks said in the last podcast, was that you gotta, as an entrepreneur, and even as a business owner or marketing person, you gotta go for the channels that you believe in, and you just take some bets. And it
Yeah.
just seems so logical these days that you would have more people ignoring emails and ignoring ads and going more towards influencer led slash person authentic voices in the space. And so that's what we're trying. It seems to be working. Were there any other surprising elements of the research that you found that we haven't talked about?
One thing that I thought was particularly interesting, and I wasn't trying to find this out, but the difference between, well, two things I'll tell you, but there's a big difference in companies that are selling to the enterprise versus companies that are not. Selling to the enterprise is its own beast, and everybody is trying to do it. Everybody is trying to move up market, but you can't sell to the enterprise with the setup of someone that's selling to SMBs or mid market. Everything in my research showed that companies that are selling to the enterprise, they spend more on sales versus marketing. They have more of a headcount of more of their marketing budget is invested in people rather than tools or programs. So it's very much kind of this fairly complex selling motion that takes a long time. It's not very rewarding, and the benchmarks are completely out of whack for someone to sell into the enterprise. So if you're going to do the enterprise, be prepared for a whole new level of pain and complication. So that's one thing that was interesting to me. The second one,
How much before you get in the second one, how much more do they spend on sales? The sales organization versus marketing in selling to the enterprise. Makes sense to me
yeah,
that they would.
typically, if we see kind of a typical split, it's about in a smaller company, it's about 60-40 in favor of sales. When you get to sort of mid companies like 50 to 100, it's about 35% marketing
Okay.
and 65. But if you're selling to the enterprise, it goes all the way, the low end of that is 25% marketing and everything else
Mm.
sales. That's something that you kind of see is like a couple of things are probably happening at play there, which is that those companies are bigger. And so they're going after bigger targets. And when you're bigger, you just spend more on sales. That's kind of the way it is because you're marketing, law of diminishing returns and all that. It doesn't mean that your budgets are smaller. It just means that, sales is just bigger and more complex now. And so that's one way to look at it.
Mm. Yeah, and it's solution selling, and you have account teams, and all the larger sales organizations. That makes sense. I'm sorry, I interrupted you for the second. What was the second one?
Product-led growth. So we can split our results by sales-led growth versus product-led growth. And the thing that was interesting to me is that product-led growth, yes, they spend more on things like paid search, they spend more on their website. Those are all things that we can expect to see. But their growth rates are much more volatile than if you're sales-led growth, which is another way of saying that product-led growth is exciting, but it's risky. Sales-led growth is boring, but it's a bit more dependable. And so you can control the outcomes a little bit better with sales-led growth. Is like if you've got enough of a decent sales team, you can predict your growth by the kind of activities that you're doing. Product-led growth depends a lot on just kind of immediate product market fit, virality, word of mouth, having, unlocking that perfect feature on your website that causes people to convert and buy immediately. There's a lot more tinkering to do with product-led growth. So they
Mm.
have their floor of growth rates is a lot lower, but their high of growth rates is a lot higher. So that there's a very big dynamic range in product-led growth companies.
Wow, this is so valuable. I mean, I gotta imagine people will want this research because product-led growth gets such a big, it's getting a renaissance. Let's say there's a lot of people interested in it. It's kind of attractive, but I wouldn't have known how to quantify sales impact, like actual revenue impact, one versus the other. That's just fascinating to me. And I wonder if it's the maturity of the sales models versus PLG models. But yeah, it's really. Do you have a take on why one would be better, more risk? Why PLG would be riskier?
I think it's because the sales motion is kind of a tried and tested motion, right?
Yeah.
You make enough calls, a certain number of those people will return your calls or emails, and a certain number of them will buy your product, run through a demo. People are used to buying that way, people are used to selling that way. But in order for you to sell your product without a sales team, like just hope that they'll find you, it depends on them searching for the right keywords. It depends on you showcasing the
Yeah.
product in a way that's immediately attractive. There's so many different variables to get right with product-led growth. So when you get it right, there's high growth, but most companies take a lot of time to get it right. And so there's a
Yeah.
lot more tinkering.
Yeah, a really, really good answer. And I wouldn't have thought of that, but you're exactly right. That's exactly the reason. Where does this go? Like, what are you going to do with the research now that you've done it a couple times, right? And now you can see the trend. Like, what's the next step in this? I know you'll keep doing it, but what questions do you have that didn't get answered, or what are you most looking forward to in the next round?
I think there's still, and the next round that I do, the next survey that I'm going to do is more on like performance based metrics. So this means like cost of customer acquisition, cost per leads on the different channels. And so this is more around like, I'll get better answers to say that if you are spending on brand, which channels are working for you? And if you're spending on brand, what is the benchmark for what good looks like versus if you're not spending on brand, what's the benchmark for what good looks like? Those are the kinds of things that this survey, which is purely about how companies spend, the next survey will answer a bit more about how they perform when they spend in this pattern. And I think that's important because it shows that, look, in B2B SaaS, even though it's all SaaS, your goals are different. And the matrix of goals are very different. You can be a mid-sized company that's chasing high growth. You can be a large company that's just wants to consolidate its market share and it's not looking for high growth. You can be an incumbent that's like $10 million and you need to grow like a bajillion% in the next 2 years. Depending on what your goals are, how should you think about investing in your channels and what channels are working versus not? And I think, us talking about video, that's going to be a big play where we start asking about like what tactics are working. So there's video that exists on its own. There's video that lives in social media. There's now video that is embedded in your email marketing. So how well is that performing compared to all the static emails that you sent before? That's going to be really eye-opening, and I'm excited for that.
Oh, that's going to be so cool. I mean, that is the question. Because let's say you could convince your leadership team that you need to spend more. Like then it's like, what do you do? What's actually going to work? And by company size, and that's really cool. And when you put that together, it'd be really interesting to look at tactics, newer tactics, because video is kind of a format, but that's how are you using video? Is it podcasts? Is it shorts? Is it all these other things? Because within each one of those tactics, there's approaches, let's say, for marketing. I just think marketing is going to change pretty significantly in terms of what works for brand. And, you just wonder if brand media is going to work as a primary tactic. Maybe it's a secondary overlay tactic, but versus other things like what we're doing here. That will be a super interesting study.
Yeah.
When will that come out?
That's going to come out in June. So,
Cool.
and this is if you follow me on LinkedIn, just this is the time to message me and say, hey, this is what I want to find out in my next survey that you do, because I'm just about ready to launch that survey. I've got kind of the basic questions ready, but this is the time to ask me what you want to find out.
Oh, that will be very interesting. I should have you back on when we
Yeah,
talk through that. That'd be super cool.
absolutely. Yeah.
Okay, I wanted to do one thing with you before I let you go here. I've been doing this thing called AI Roulette, where I load your profile into Perplexity. I give it the information we're talking about today, and then I basically tell it to ask me a question that's provocative slash
Gonna be exciting.
disrupting. And so let me push that here and see what it says here, and hopefully it will come back without too much. Okay, this is good. Okay, based on all your data and experience researching SaaS brands, what's the one thing SaaS marketers consistently obsess over that your research suggests doesn't actually matter?
Oh, that's a really good one. Gosh, they obsess over so much, but yeah, I would go back to attribution. I think it's just if you woke up tomorrow and you said and you were given permission to say that we're not going to do any attribution, I suspect that the success of your marketing wouldn't change much at all. I would hypothesize very strongly that if you ripped out whatever attribution software, whatever attribution dashboard, whatever it is that you have in your company, you ripped it out, you wouldn't lose much because the truth is you're already spending on certain activities. You should track how those activities are performing. So for example, if, and not to toot my own horn, but if you're getting less visits to your website than a company that's of the same size, that's been around as long as you, probably not doing as well as you should be. If you're spending way more on your LinkedIn to acquire a lead than another company is, you're probably not doing as well as you should be. But having said that, if you are trying to attribute your success to a single channel, multiple channels, trying to track the journey across all those different things, I would say that that's, the ultimate goal of marketing, which is to make more people aware of who you are and what you do, and to get them to your own properties to take some sort of quantifiable action. You would still probably be just as good as that as you were with attribution software.
Wow, to the dismay of attribution software providers everywhere.
I don't know about you. Like, have you seen one that's really been like, "Yep, I believe this one," and you
No, 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 no. And they're usually a reaction to someone downstream, like sales asking for or taking credit for a lead and needing to then work it back up. So take that equation out of the mix, the defense of like, not defense, but working with sales to try to tell, hey, we gave you this, then really it could be, I totally agree. It could just be activity based. It could be more visits to your site, less spending on ads, more followers on social channels. It doesn't need to be some complex system going downstream. But there's always I feel the pain of my friends that are CMOs needing to try to justify when sales says we don't get any leads for marketing, they have to somehow justify it. But that's a great answer. I'm always amazed how, so I've done this like 4 times and Perplexity does much better questions than I do every single time.
It is quite impressive, and it's a fun.
Eventually, I'll just do the podcast by just like you and I will just be answering questions on Perplexity AI questions. I am super happy to have had you here. The research is just, I love geeking out over this particular topic. And you've put a voice to, I think, something that is unknown. You've made known what has been unknown in the past, which is really cool. And I'm very excited to see the next round of this. I'm going to urge everyone to follow you on LinkedIn, go to your site. But I wanted to give you a chance. Is there anything that you would want people to do after watching this? How do they stay in touch with you other than those things? What's the best way?
Yeah. Well, first of all, thank you so much for having me up here. I can talk about this stuff all day long, and it's a wonderful conversation to have with you. So I was excited when you sent me over the topics. I'm like, oh, this is going to be a good one. So I really appreciate it, and I enjoyed my hour with you. For your listeners, if you want to follow me on LinkedIn, that's probably the easiest way. I'm perpetually online more than I should be. And if you want to check out the website, benchmarkerdata.com, we do it on a subscription based model. So if you want to just sign up and get the data and you want to cut the data any way you want, we have a database. You don't have to talk to me or anybody you want. You can just come to the website and do it. I'm trying product led growth as well as sales led growth. Let's see how that goes. My goal really is to be the CMO's best friend in the boardroom so that they don't make decisions in the dark. And if I can do that, then I'm pretty happy about it.
Yeah, I think it's great. Like for me, it's a great quarterly planning tool, right? You're just kind of redoing the plan, or you're giving evidence for the plan that you're maybe tweaking some stuff based on the data. But it's really fantastic. Omar, this has been awesome. I'll include all the socials and everything in the description here. But thank you so much for joining me, and I hope we talk again soon.
I'm counting on it. Thank you, Kevin. Take care.
Okay, man. I'll see you.